get an assessment of the economic damage now. I'm joined live by Takahira Ogawa. He's Standard & Poor's Director of Sovereign Ratings. Mr. Ogawa, good morning. Thank you very much for joining us today.
Thank you.
Is Japan facing a downgrade by Standard & Poor's?
I think it's too early to call a shot because the situation is still unfolding. And as you reported, that there is a concern on the nuclear situation. So we need to see a little more and getting a better grip on the situation.
Many analysts, many market participants, Mr. Ogawa, have been looking at the fiscal situation of Japan, saying that it really can't afford a crisis to rebuild its economy. Do you think this earthquake, this tsunami, this nuclear issue will trigger a fiscal crisis?
I think it's difficult to assess, but we are safe to assume that the magnitude of the reconstruction cost will be higher than that of Kobe earthquake. At that time, in between 1995 to 2000, the central and local government spent something like 16 trillion yen.
But can Japan cope with the added debt burden? I mean, will its debt burden increase materially? Because I suppose that's what you're going to be focusing on very closely.
Yes, indeed. It depends on the situation, as I mentioned, because how long the reconstruction and the rehabilitation of the economic system in that particular affected area could last, and then to what extent the government need to pump the money. It's all uncertain now.
Yeah, I mean, do you think that the markets can absorb the debt that Japan, whether it's on a national level or on a state, on a local level, do you think that the markets can absorb that debt?
Suppose the size is the same as the last time when the recovery of the Kobe earthquake needed, then 16 trillion in six years, which means that less than 3 trillion yen per year, which is not so significant. But as I mentioned, this time we are safe to assume the total cost could be much higher.
What sort of extra premiums, though, will Japan have to pay?
I don't know, because you see there are a lot of different types of the funding. Some part of funding could make way by cutting the other expense of the government expenditures. And then Bank of Japan might have the part of the burden sharing. So again, there are a lot of factors we have to take into account.
Do you think the Bank of Japan is doing enough? Some have criticized it, saying, yes, they pumped record amount of funds into the economy, but they're not doing enough. Do you expect them to do more?
I don't know, because those operations are liquidity support operations and nothing to do with the sort of the smooth absorption of the increased size of the government funding programs.
What about capital outflows? Because many are concerned if Japan has to issue lots of debt and if premiums increase, there will be capital outflows. Is that high risk?
At this stage, there is not that high risk, but there certainly is a risk of the capital outflow, because the 95% of the government debt is held by the Japanese residents. So if there is any concern or the lack of confidence on the Japan's sovereigns funding programs, there might be outflow of the capital. But at this stage, I don't think that is a very significant risk in near future.
Mr. Ogawa, thank you for joining us today. Takahira Ogawa, their Director of Sovereign Ratings at Standard & Poor's.